Welcome everyone. Fadi Hamza here. 4:37 p.m. October 11th, 2023. Welcome all. Last week I missed. Hi Alexander. Welcome. I missed this webinar, and originally I postponed it to Thursday. As you know, I've had history of rhinovirus. It gets you, and the problem is breathing. You kind of all of a sudden catch yourself out of breath, and it becomes a little bit more serious if you have to do anything else like driving. Okay, you got a problem. I wanted to get to my what do you call it? My GP's office, which is kind of around the corner, just south of me, 5-10 minutes of a drive max, and it was a chore. So I moved it that day, and I got there. But next day came back again. It hit me again. This time I got my neighbor to drive me. I told him, Tico is in your hand. Here's the key. I'll come home with Uber or something, but just get me there now because you need really high pressure oxygen into your lungs. And I have a oxygen can, but that's not a high pressure. Long story short, I missed. The phone was left in the house. There was obviously no charger or phone with me there, and I was out of touch. So the Thursday, the Wednesday that was moved to Thursday got expired. If it's not attended, if it's not open, expired. Some people didn't know, and they were in the dark. One guy got really upset with me and went nuts. Listen, you can go through Time and Digest, okay? Let me say something here so we can understand each other really well. This is Time and Digest, okay? There's a phone number. Call them. There are about 125 people here. You don't have to go with number one. There's between 2 to 124. There's 124 people approximately underneath my ranking. You can go with them. But if you want to go with me, we're going to do it my way. Capiche? I was sick. He writes me this big letter, Nobody answers. What's wrong with you guys? And what are we going to do with the trade and all that? Well, let me tell you what we're going to do with the trade. Here's what we're doing with the trade. It's trading at 394. We paid 277. Okay, so we're doing okay. We'll decide what we're going to do probably tonight or tomorrow, given where the rankings are. And and of course, this was I get about 200, 250 emails a day, which is not too much. Given I get a copy of every department gets, I get a copy of what's happening at PayPal, I get a copy of comments directly from you guys, and of course my own stuff. So I get quite a bit of email. I had to go through them and find that one. And I responded to him. I said I was sick, but I don't wish anybody getting a rhinovirus. There's no therapeutics, and it's a viral, so you have to wait it out. There's no antibiotics, and there's no vaccine. I've had it 4 times now. Now this one was a soft one. The first one, this last December, was very bad because this time I knew what to do quickly. Back then, they wrote in my file at NCH on Immokalee emergency room. They said I came within an hour of dying. So take it, be serious. I know where I got it. I got it from sit to table because I've got it 2 more times from there. I've timed myself. Yeah. If you wait, you're gonna be in deep trouble. Rhinovirus with the H, not RINO. That's what Trump would use. Yeah. This RIHINO. Yeah. Has nothing to do with your politics. Anyhow, very nasty. You can't breathe. So you gotta walk around with these asthma treatment stuff in your pocket. So don't do that. Anyhow, let's move on. I don't have anything to report to you guys on housekeeping. No, we had a very eventless transition to October, both for the indicator package, which is end of a quarter, and also ORB. ORB has been on fire, but I've been saying it. I've been saying historically, because the volatility goes up, mid-August, I'm sorry, no, not mid-August, sorry. Mid-September to mid-December is the best 3 months of ORB. That's our package here. And remember, this is our third season live. Forget the back testing. This is live. This is this package there. We did post up the 4.5 series. We did allow it to open up for second trade. And this September 11 was introduced. 4.95. No problems whatsoever. Here's the charts. You can blow it up to take a look at it. Countries we have done, and so on and so forth. So very happy about it. Customers are happy. Some people adding to their positions. Fine. Because they get trading multiples of 3. You want 3 units, 6 units, whatever. I'm saying 1 unit, 3 contracts, 2 units, 6 contracts, 3 units, 9 contracts, that kind of thing. Hey, I told him in the summertime, slow down. Don't keep paying me extra money. I can't do with it. You're going to lose money. You're going to blame me. Throttle back. When the right time comes, we throttle up. It's called seasonality. Then you can pay me extra then. But right now, keep your sanity. Okay? So, that's that. Let's go to, so I apologize for last week. I apologize. But there was none for last time. No webinar. Because some people went to the webinar to our YouTube channel, didn't find anything there, and they're also upset about that. What happened to that? Did you forget to upload? No. I recalculated. I mean, I submitted. Remember, on the GoToMeeting and GoToWebinar, I can reschedule it. You get an email, but you got to monitor the email you signed up with. Now, one fellow had bad email in. There's nothing I can do. I have suggested to GoToMeeting. They should set up. They have the room to do. They have the software and the hardware. I said, you guys have plenty of this. You retain so much history. Why don't you also retain a list of customers' email, gotta keep it confidential, that are verified. That is, before you send them the login, make sure they verify the email. And since we're doing this one time only, okay, you go here. So one time, register once. All you have to do is once, so that and I know their work is good. I mean, the link is good. That is, if you get a link that says "Come to the webinar," you've already verified it. That you have to accept it. Go to the email that you sent it from, accept it, then your link goes there. Otherwise, you don't have a link there. This way, yours is verified. This gentleman had the wrong email all this time. So I don't know whose fault that is. I'm not trying to point fingers, but I think it's a shortcoming of also GoToWebinar. Like in our system, when you join the MSA alerts, you have to get verified. We'll send you a message. When you apply it, then it goes. Or you log into a PayPal. If you log into the PayPal's verified your email. Okay? Yeah. So anyhow. And then also, please, when you communicate with us, use your PayPal email. Okay, it's verified. And please do not use 5 different emails. I had a gentleman, every time he writes to us, use a different email. I finally blocked all of them, other than his PayPal. I'm not going to go and chase you to see you're verified or not. I'm sorry. Remember, it goes back to here. If you want to hang out with us, you want to hang out with the best, there are some rules. If you want to be unruly, do whatever you want to do, then that's fine too. But this is not your website. Hope we understand each other. Thank you. Okay, let's go to Econ Calendar. We already talked about housekeeping. Tomorrow we're going to have CPI. Now, there's a talk today that we're overbought and we're ready to pull back. There's some data to show that. In the chat room, Peter went into that. There was a guy from Wells Fargo, the biggest index traders, organized, yeah, in terms of nobody trades as much as ES does. They do. I don't mean brokering for clients. I'm not trying filling orders for institutions. No, I'm talking about their own proprietary trading. Wells Fargo is up there. Back in let me put it this way. In the 2000 era, the early part of 2000, on their average trading notional volume, I'm sorry, not notional. That's not right. Average margin. Average margin they had, of course, nobody's gonna hold them to that because they have seats on they have ownerships on the seats and so forth. The AAA credit rating facility, but their margin money was around 240 million. 240 mil. Okay, so these guys know what they're doing. Just in the ES market. Today, the gentleman there from which I don't know him, but I understand he was making commentary for them from Wells Fargo in San Francisco, saying that he sees still a 4150 on the downside, but 4480, 4500, something like that on the upside. And he thinks that we still have a little bit more to go before we drop lower. We're not going to go with any of those. Why? Because then they'll become our crutch. We're going to use our indicators. Can you guys hear me okay? I lost for a second. Hold on. Can you guys hear me okay? I lost you guys for a second. Okay, there we go. Sorry. Can you guys hear me okay? Hello, 1, 2, 3. Okay, just want to make sure. There was a beep in my headset and it went away. Rich, thanks, Richard. Rich and Dennis, this is what happens when you buy a fancy headset. Anyhow, I'm back to the headset, but at least it's a good one. Okay. Tomorrow, we're going to have jobless claims every Thursday. EIA, we don't give a damn. Or that's because Monday we were closed. Bond market was closed. So there was EIA data. That's right, Columbus. So we got jobless claims. I don't know what this is going to be. Who cares? These numbers are very, very muted, but not CPI. So if CPI comes soft tomorrow, the consensus is that we're going to rally very strong. I can't rule that out, but I have to make a decision tonight because by the time the number comes, options are done. Options are not open. So at 8:30 in the morning tomorrow, I can't do anything with the options. So I got to make a decision tonight, and I will. That's for this week. There's nothing else there. Consumer sentiment on Friday. Consumer sentiment. That's you of Michigan, I believe. Yeah, you of Michigan. And 68, 67. They're taking a little downtick. Okay. Yeah, I think overall, and let's talk about this. Hold on. Let's talk about PPI today, because by now they should have finished posting everything. There you go. They did. Okay. Yeah, there we go. So let's look at this. Yes, month to month became higher, slightly higher, only slightly higher, year to year versus expectations. Okay. Ex food and energy came in line. What the hell's tracers? I don't know about that. Anyhow, and year to year was 2.7. I think this came mild. If we get another mild day tomorrow, you're going to see a rally. You're going to. Okay. Look, ES did. Here's the ES right now. Let's go to overnight. ON. Here's you can see the sigma levels and all that. We're up 26 handles. That's no chump change. Okay. And if you look at ES on the cash basis, we're even close higher yesterday. That's why our options on PMT are shooting up. That's just normal. But I got to make a call. My original goal was to look for 50 bar. That's another 100 points from here. No, I'm sorry. 40 points. 40 points, another 1% from here. We could do it tomorrow. I just don't know. But we'll see. We've on the as far as the margins. I mean, I have not computed this. That was obviously 378, 76. We point two. We close 2 handles below the high. That's not put here yet. This chart. Let me go here. I haven't had a chance. I looked at it this morning, and that was it. Okay. Here. Okay. That's not in there. And so your yield is going to drop slightly. As you know, that's just the math. If we're both long, that spread gets slightly slower if we're in line. If we're one long, one short, remember, this always can only be long because it's a buy and hope. That's what we call it. Buy and hold, we call it buy and hope. Because that's 80%, 90% of people are doing that. Maybe even more in the country. And some of them indirectly. They don't even know they're long because of, pensions and so forth, so on. But individually, very few people are short. But if we go short and the market is dropping, we make a killing because we're going up. We're earning, and we're that's losing. But now we're in line. This issue may dropped because we were long. I'm saying we were short and market dropped, so we caught up. We're at all-time high. We've never had a return this high yet. Okay, that's why we had to open the highest, another level of 230%. Now the difference is what that this number is. So as we go up, and the market goes up, and we go up, this shrinks slightly. That spread gets narrowed. It's just how the math works. And of course, here you could see actually, this was the biggest gain. We were long, we were short. I'm sorry, and market dropped. Markets only be long, so the damage caused here was huge, and we rallied. And then, of course, we timed the center really good. So the two got added together, made me time of the decade. Now that differential isn't there. This differential was massive. It was like 100 and something. I don't know. I forgot. 130, 140, somewhere in that range it was at the peak. Down here was big time. I mean, we had 130 versus 10. Yeah, this is the anchor. This anchor price. This was like massive, massive, but we've given it back. But that's okay. The fact is, though, our performance continues to improve against itself. Okay. So I gotta think about it. I gotta think about this tonight. I will. Now let's look at the charts where we are. 115 on the McClellan oscillator. 97. Oh, one more thing. PMT members, this is part of your package. We expect you to watch this because we used to post charts, except I would get behind and never do it. But here we're doing it every week. And during the day, we're posting charts. So follow Admiral Tico. Okay. That's Admiral Tico. And then on YouTube. Between those two, you'll be covered. Here's Admiral Tico. I'm sure you guys know him. He's a very, very smart cookie. As you know, as long as you feed him tomahawk steaks, he does very, very well for you. Yeah. Richard knows that. Sometimes when we meet for grab a bite to eat, Admiral Tico is there with us. So he's putting charts up. He's talking about different stuff about market timing and so on and so forth. So follow him if you can. And it comes to your phone. That's the beauty of that. Charts go to your phone. Okay. Nice push up on the CI, but look what's happening with CI diff. We take a little bit of pause there. Now, if you want to lock the best return, you can't hesitate. So this is the time. Time is today, tomorrow. I think we will be now. Also, the trade, and always in PMT, please do not get into a trade that's open. It's too late. You get into a trade by email. When the email comes to you, it says do the following. Here's the why. These parameters have changed dramatically for October 20th. Next week is a theta decay. Friday is the 13th. You have a week to go. All of a sudden, your rate of change of the decay, it goes massive, gets exponential. Because on Monday we have 5 days, so it's 20% of what's left. Tuesday's 4 days, so you got 25% a day. 33% on Wednesday, 50% on Thursday. So you've got to take action. We can't sit here. This will kill us. So we're gonna probably go and lock it in tomorrow. Okay? We send your email to you. You jump out. Are we good there? Okay. Let's see. This is equally weighted. That's also coming to center line, which is 20 bars. I had been talking about, let's see what we do at 50 bar, and we're almost there. I don't think we're going to go shoot up. I don't think so. I think there's another leg down probably, because everybody's talking about Christmas rally. When everybody's focused on Christmas rally, you guys short it. So, why? Only minority will win. There's not enough money for majority to win. Money doesn't go on trees. It has to be distributed to you. So, excuse me. All right. Transportation. Nice comeback. It was getting worrisome as it had gone through center line. Of course, you didn't see that last week because I wasn't here. Of course, Russell is in toilet. Russell has been actually below this is the death cross, birth cross coming back online. The 50 bar, which is this cyan bar over white, went back up and now it's heading back south at the lower level. So we'll see. Very, very interest rate sensitive, and that's part of the problem. The trender, let's do our count. Negative, I mean, that's 0, 1, 0, 2, 0, 3, 1, 3. Okay? These are above or below. So it's 1, 3 up here. 2, 3, 3, 3. 3, 4, 4, 4. So even. Yeah, it's right in the middle, right about the middle of which way. There's a bias there. Yeah. We've come up with this count. It's not very scientific, but you get a feel about where we are. When it's all up, it's a short time. It's all down, all there is a buy time. So right now, we're middle of the travel area. Excuse me, there's a price. Let's look at Vols. Vols came down as we expected. Yeah, this is all no more. Okay. Now we put our trade on when? On 29th, which was this Friday would be 2 weeks. Is that what it is? Hold on. Yes, this Friday is 2 weeks. So we've done okay. We've done okay. All right. Okay. All right. Let's go to SP1 Momo. Remember what I was talking about here? I said, look at that peak. That means the low is in or about to be in. That peak is that's number of weekly lows for S&P. I'm sorry, 52 weeks. 52 peak low for S&P. We went to what 64, I believe that is. Hold on. We had 64. We haven't had 64s in a long time. This is the weekly of the same data, so you could see that was a reach. So that said the low is coming, and lo and behold, we got it several days forward. Now we have no reason here to be short yet because we have not. We don't have a peak in this number yet. When that number peaks, look what happens after that. Okay, you go a couple of retests, and then everything falls apart once you get to up there in the CI. From why? Because you already gave that signal. This is a forward signal, forward looking. Remember, the internals move before the price does. The issue is really subjective to how you interpret it. Okay. All right. SP1. SP1 is above center line. Okay, so again, no bias here, kind of neutral. But we came back from the lows we had, and you could see the divergence. Higher low on Momo, lower low in SP1. As you know, Momo is a smaller brethren of SP1. We do not give these two outs. I had a gentleman who said, I want to buy this package and I want this chart. I just told him here's the front door. Yeah, I'm sorry. We're just doing like that. Yeah. And he told me I'm out of my mind. I said, okay. You're not the only one who said that. All right. So, all right. SP, no, I'm sorry. SQ. We pulled up on SQ because we were down there. When this got very low, corresponds with the price being really low. They don't go all the way 1 to 1. Sometimes you get an advanced warning there. You see the high there? Well, the price continued, but obviously we had a drop. That was one signal. There's another signal now. I think the problem is the budget again. Don't forget, in about, let's see, today's the 10th. We have 45 days. So in 35 days, because that was September 30th, and they kicked the can down the bucket. So 35 days. Let me set, that's 5 weeks. In 5 weeks, we're going to have a problem. And I don't see people resolving their issues. And they're going to take the government hostage. And so seems like everybody's in hostage taking these days. So that's the problem. Yeah. Okay. We came back up tiny bit on the long end, but overall, it was a relief rally on the bonds. Okay. Obviously, we really went up there heavy on Friday, I think. Was it? And then it gave back Monday open, but the bond market was closed on Monday, and so you had a skewed trade. Um, and there was a catch up to do on the bond futures when it opened Monday night. Okay. Um, so rates have come back down somewhat, but look where we registered. This is a 7-year high, guys. This line. We went to 5.05 on the 30. Okay. Much even higher than 10 year. We had an inverted yield curve. Now it cleaned up, and now going back to inverted again. You can see it. Okay. Uh, Now, the comments, yes, this morning from or this afternoon from the FOMC minutes were, to me, were bullish. It's stated that, according to what I heard on CNBC, didn't have a chance to read it. A copy comes to me, I gotta read it later. But there was probably crucial minutes. It said we're happy and well, we expect maybe one more what do you call it, a rate change. Uh, that's probably what bond market want to hear. That they think probably this is it. That's why the close we had. As a matter of fact, right about that time in the chat room. Let me show you this one. This is probably a better one. Yeah, we were doing this. Okay, this is right about 2 o'clock. When they read that, I said, guys, there's a good chance we're going to close at the high of the day. Why? Because just patterns, looking at the patterns before. And you could see what kind of pattern we had already. Coming to the release number, this is at 2 p.m. And once we got past here, this the IB low, this is the first hour low, I start pounding the table saying, guys, just stay long. Stay long. Or cut off, go flat, come back at the end and go long. But this is going to go close at the high of the day, and it did. So I was lucky. I mean, seriously, I mean, it's a random event. Sometimes you get it right, sometimes you get it half off, sometimes it's a disaster. This time it followed the script. And we were grateful for that. Why? Because I was in the toilet here. I was in deep trouble. And this rally brought me back in. So I thought they were trying to get rid of me. Remember the scene in Godfather 3 in the kitchen? Yeah. Just when I thought I was finished, I thought they were trying to get rid of me. And so, no, they brought me back in. So I'm good. Okay. TD. All right. And look at these lows we had. I mean, just look at these values, okay? Some stuff you missed probably. I know people get used to it and they don't have it. You know, it's like Mikey. You take the food away from Mikey, Mikey is going to go nuts on you. Remember that ad? Yeah. Well, does Mikey like it? So this is a spread, but you can do it and run it yourself, guys. You take the front month, which is October, and then 3 months later, which would be January, you take the difference and you do a standard deviation return on it. That's simple. And you could see where it gets near the inflection points. Now, this one I don't count, but this one, this one, this one, that one. When we get 2 to 3 sigma levels, they want to flip back. So when we went from very low readings, listen, we printed 0.04. I'm sorry, negative 0.4. Okay, we haven't had that in months. So to me, that was a tradable bottom. And you see, we have it. So remember, a lot of it looks like gibberish, but really there's a rhyme and reason. But you also have to have a little luck. It's not 100% mechanical. If it would be mechanical, I wouldn't be here. I would own half of Manhattan. It doesn't work like that. We all got to make mistakes. All right. Now, Lowry's yesterday had a very high reading, but over 90. No follow through today, even though we almost got there. but not from an advanced decline. I'm sorry, from a volume point of view. As you know, we post these. Admiral Tico does. Where did it go? Huh? Hold on. Admiral Tico, where did you go? 1 second. Let me go through again. I should have closed it. As you know, oh Jesus, come on. No. Okay, log in. I don't know what they have done to this. I don't know what's going on with Elon, but I think it's nuts. And it shows to me the financing is a problem. Huh? Yeah. He's experimenting with different things. So, yeah, somebody should write him a check. Okay, this is the chart. Okay, you want to follow Walter Deemer. He's got a good saying. Get his book. It says when you want to, what does it say? It says when time comes to buy, you won't want to. That's a really good low. So there was a lot of discussion about these charts, Tico charts or his chart, whatever they're same numbers. These levels yesterday. I mean, went back and forth. My phone was full. I mean, one message after another who were answering to it. Listen, it's just a setup as described by Paul Desmond, bless his soul, very smart cookie, head of Lowry Research in Tampa. And this is what the numbers are. We also look at, they only look at SPX, but we look at NYSE, NASDAQ and also Russell. Okay. Up and down volume, price action versus these value numbers. I forgot the inputs here. There's some value inputs here that Trajan has the time series. And it went long, it just went long, and it's been long. Are we good? Yeah. Now, I'm not saying you should do this, but it's doable. Now, I look at the long and short. To me, these are smart indicators. I don't blindly follow them. I do not. No. But they're smart indicators. I look at it from not a criminal case. So it's not beyond a reasonable doubt. And I'm no Jack Smith. Okay. But I do preponderance of evidence, which is civil cases. And again, I'm no Luther James either. But I go by, majority of the preponderance of evidence. So this is one more that I look at in my back of my mind. I want to know that. Here's our this is the chart we send you when we start the position. This is the one we monitor. This is the actual spread, and you could see the spread value last versus midpoint of bid ask. That's how we monitor this. Okay, for PMT. Let's see. Let's go through a couple of charts which I had ready for you guys, and we never used it. I apologize for that. This is normal. This is 200-day. What I noticed was that, what if I do, I'm sorry, this is a 50-day. It's a 50-day. I'm sorry. This is our normal. 200-day, right? Yes, 200-day moving average. And I said to myself, let's take a look at also the 50-day. It turned out to be a decent oscillator. Yeah. Here's you can see what has happened worse. This is 2008. Last time we had a really full shutdown. I think we could get one this year, which nobody wins, by the way. But yeah, actually, our cost goes up. But trying to explain that new tricks to these old dogs, it doesn't work. This is the pandemic, and this is what we had last year because of interest rates. Okay, now we're here. We did not go past 35. We got close. Now, what you want to do, have this symbol 200R to be 50 bar. Okay, there you go, 50 bar. So you could see that. Now, let's go to 5 years so we could see in aggregate what happened in 5 years. You could see that. This was one of the lows. Not bad, not bad. And so we're going to start keep using both of them, keep it an eye. But they're very good for pinpointing near the low, and what bias you're looking at. I'm new to this 50, but I understand the concept from 200. I've looked the other one at this one. Oh, geez, I don't know. Since 98? No, not 98. I'm sorry, 2008 or 2009. Yeah, I'll look at this. So at least a couple of times a week. But take a look at 50. I had it ready. I did not brought it up last time. My rush. But you could see that was also pinpoints. Our timing is okay. Any questions, guys? Again, this is being recorded. Will be posted as always on our YouTube channel. We got a lot of we have what, at least 1,000 videos, yeah. And each week we post maybe one. During the month, there's a couple extra ones. I noticed the big hit, the Gamma. Now, there was a gentleman here, which I think is here too right now. Not Alexander. Let's see. Not Alexander. I don't see him here. I think he may have left. I forget. Anyhow, he had some questions and he wanted me, either myself or Peter, to give estimates of some VIX numbers and high and lows in the last month. Last 2 weeks of December. Guys, nobody can tell you that. Okay, why? The accuracy of a forecast is as good as about 1 to 2 delta. Okay, so if you're looking at the daily charts, you're going to be good for 1 or 2 days forward. That's it. Okay, if I'm looking at the weekly chart, let me go here. I mean, just these are simple, common sense stuff. This has the accuracy of 1 week. Okay, and if I put a monthly, how would I know? Just the noise is too much. The bars are too long. Yeah. So we can't tell. I don't know what VIX is going to be. The question was, can you tell me what the VIX range is going to be in the last week of December? You know what? I'm too dumb for that. It's a very good question. I just don't have an answer. And I'd like to know who does. I'd like to challenge to see who does. So here, let's go to a monthly of this and see this. What's the range of that range is going to be? I don't know. How can you tell? It's 2 months plus from here, 2 more bars, but you could see what the ranges are. Huge. So that's not tradable. You cannot come up with a strategy that will survive your trading. It's going to nick your account. Don't do that. Remember, it's not that mechanical. We have a lot of mechanical tools, but it doesn't work out. You know why? Fear and greed. You have a skin in the game. If I sat here and say buy or sell, means nothing. I got to be in that position where I could get a margin call. How much of my concentration goes into that trade? The other things you got to look at. So I don't know anybody who can predict for you that far ahead. So anyhow, that's it for me. That's about it on my end. I'll be more than happy to answer any questions you may have. Now, again, reminder, this is part of your PMT package. Please come to these webinars, or at least watch them on the YouTube, so that you're aware of what we're doing. The reason we're doing this is because I'm so busy, and this is much easier. I can do the charts, I can go over it, plus I can answer you, and also reduces my work on PMT. So what I put in PMT website is actual trades, the meat of the problem, but the support stuff to go through is here, and on Admiral Tico. As a matter of fact, when you go to here, PMT preview, and let's say look at a preview. Let me go here. Okay, there's Admiral Tico. I'll tell you what he's up to right there, so you can watch his trades or his commentary and so forth. Okay, who the hell is that? That's ad. Forget it. Why is that? Yeah, mute block. Boom, boom. Get out of here. Okay. So anyhow, and some days we post more. You see, some days we post more. Sometimes he reads something interesting This is Lisanne Saunders from Charles Schwab. Yeah. And you could see, look at this, what we're talking about, 904. So there's some timely charts there. Okay. He's got about 1,500 people following him. So he's doing okay. He actually monetizes this to pay for the tomahawk steaks. So you're helping him. I'm sorry. Michael, why? I'm sorry, which chart was I on? I'm sorry, let me bring the chart up. And Michael is asking the lower line of the chart of channel held. Why not rally to upper before the sharp decline? News? Did anybody knew? On the spot. Okay, hold on, let's go there. Did anybody on Friday had any idea what's going to happen on Saturday? We opened our eyes on Saturday and everybody went nuts. And that's the daily. I'm sorry. This is the hourly charts. Yeah. So let's go here. Let's do it another way. Let's do it another way to address his question better. Let's put a SPY here. All right. So if you look at it here, we'll find support here on the dailies. Okay. Way above on the weeklies. But yes, if nothing bad news comes in front of us, it rallies. Or even and occasionally maybe a little good news would also help too, but you just can't count on that. Yeah. And to me, the earnings are in front of us. They're going to be big determinant. We have interest rates, so that's the Fed. Also, we have some refinancing coming up on the Treasury stuff. So it's crowding out the commercial space for others to borrow. Don't forget, this thing's rising. The Fed will get their money. The Treasuries will get their money. It's the mom and pops who are trying to borrow. It's the people trying to go IPO. Look at what's happening with the real estate. Look what's happening right now with IPO market. Look at every VC I talk to. They said, "Oh, I'm just coming for another come to Jesus meeting." I said, "You guys gotta get secular. Get out of this stuff." Yeah, this is gonna kill you. He goes, "It's already killing us." The problem is they don't have any money for life support. If something goes wrong in one of their portfolio companies, they're really stretched. Majority of them are stretched. I'm not talking about Paul Wise. I'm not talking about Sutter Hill. What's is it? Sequoia Capital. Not the big guns, but do you know how many VCs are out there just on Sand Hill Road in Palo Alto? A lot of them are in very, very nervous mode for this, and there's no IPO market. So something between now and then could go bad. I'm not saying that's a bad goal, Michael. I'm just saying it, in my view, may not be practical right now. There's a lot of time, and we have a lot of potentially bad news in front of us. A big one is the budget. I mean, 35 days. Yeah, we're the 11th of October. By middle of November, we gotta have an issue. I think this time it's not gonna be that easily resolved. Why? Because you're not dealing with rational thinkers. They're all got too much politics in it, and they're hard-headed. So sometimes the best lesson for them is to burn their hands. Let them burn their hands, yeah, because they won't listen to us. They think they're smarter than us. They're not. Yeah. Any other questions for me? Again, to me, this is the picture. Hourly chart, okay, on a weekly support and resistance levels. Look how it tests these things. Just take a look at it. This is amazing, amazing. And you know, we've been doing this for what? Since we did, if you go back, these charts have been there since we did archives this many years. So if it survived those many years, I think we're okay. Any other questions for me? Thank you, Dennis. I'm trying to, it's very contagious. It have to be self-quarantine. I mean, I sat in the back with a mask on while I couldn't breathe as my friend drove me to the emergency room. Yeah, because you could get somebody messed up, and they go through 14 days minimum. The 14 days minimum of self-quarantining. So it's a pain in the ass. I'm still not finished, but I'm not going anywhere. Good thing is I haven't smoked, because that's the last thing you can do. You smoke, of course, cigars don't have inhalation, but as what do you call it? Clinton said I didn't inhale. Yeah, right. Sure, but no, I seriously I don't inhale cigars, but better not to be even around it. Question, Mohsen. If next week DK is rapid, we don't do credit spreads, Larry. I mean, Mohsen. We do debits, yeah. Because credit spreads, I believe you can't do. Because we do a lot of. First of all, hold on. Yeah. Listen, we do directional. We do directional. Here's the thing. Okay. Let me address that. That's a very good question. Okay. Let me go to Market Timing Pro. Okay. Let me jump in there. Okay. We're giving you a spread. Why? Because we can come up with a direction. This way out maneuvers a credit spread where your direction is not clear. And that's a credit spread. And you're selling it. Now, because our these are debits. Debit spread. That means you pay to get in. Credit spreads, they pay you. But a lot of our accounts are for retirement, and there's auto trading module available through PTI. They just don't get an order from us. So you make a lot more money if you get the direction right, but that's a big if. Here's the question. I'm not trying to be rude or arrogant, but are you on this list? The chance of taking the direction right consistently over a long period of time is not very good. Then yes, maybe you should do credit spreads. Remember, Black-Scholes model, X minus S, and the other one is your MIV, volatility and difference between the strike and current price. If you can do a strike versus current price, good, with consistency, you're going to outdo the PM volatility. Those who trade the credit stuff, they can't do the direction. Here's a proof. They're not on the list. Call them. Yeah. Okay. We have built all these tools to be prepared for that. So what should we do? Yeah. So does that make sense? Okay. So what do we do? We go flat. We achieve our goal as a percent ROI, and we go flat. Yeah. We wait for the next setup. Yeah. We don't have to be in the market all the time. That's another issue. There's no quota. I remember when between the last two signals, I was out for about 10 days. And two people had signed up. One of them says, I've listened to your webinars. I know your stuff. You let me know what my next trade is. The other guy, by third day, he got impatient, writing, where's your next trade? Where's your next trade? I paid for this. I had Matt, my accounting guy, get involved. He just closed his account. Sent his money back and closed his account. The guy comes back upset. Why did you do that for me? He says, well, because you were getting on Faris' nerves. You can't do that. I run block for him. This is how we do it. You don't have to. But if you want to be involved with us, this is how we operate. So you cannot have quota. This is event driven. You can't drive by quota. We're not trying to give you, we don't promise you, we're going to give you one option trade a day. It doesn't work like that. Things have to line up. And when they do line up, you could see the moves. If they don't line up, what are we doing there? So, if you want to have action, go to Vegas. This is not Vegas. Okay? So, we're event driven. Any other question for me? By the way, that decay is rapid next week. That's because it's got a week to go. Okay? But if we had a monthly, let's say we had a quarterly, what do you call it, trade, quarterly position. Okay, that would expire for this one would be December 31st. There's no decay now. You get 80 days to go. There's no decay. 1/80th, remember? 1/80th. It's just that when you get to last week, you got 5 days to go. So 1/5 that day, then 1/4, 1/3, 1/2, and then expires. So the point is, it depends on the duration we're having. So, any other questions for me? Good question. Well said. Thank you. Yes, sir. We'll do, Michael. Appreciate it. All right, guys. Let me close this. We're gonna post it and on YouTube again, and there will be a note on email on the on our Twitter. Again, PMT and ORB, they're killing it, and we're going to continue to kill it. Why? Volatility is back. Why is that important? It's called change. We can't make money if it doesn't change. You can't make these kind of returns trading Johnson & Johnson stock. You need the stuff that move, and we jump in and catch the ride. Why? Because we have the tools. And our history proves that we do. As ranked by third-party, non-interested group. Time and Digest doesn't give a damn about me. They've been there 40 years. They'll be here another 40 years. So, I just wish they would keep on ranking people as they used to. The last ranking they did was January of 2021, where it was named Time of the Decade. By the way, I've never seen that before. I've been with them. I've been watching at least 25 years. I was not in back in the 90s, but I would get the newsletter. I was a subscriber. But then they signed me up, and so for the decade of 2000 to 2001, 2010, obviously it didn't make it. I wasn't. I don't think I was even on the list. 2014, we changed some of our stuff, and then the rest is history. That's why our chart goes back to 2014, because that's when we changed our thinking. About a year later, we started this. So, thank you so much. See you.